Hey everyone, welcome to Easy Economics. How are you all doing? I hope you all are doing good. We are back with part two of our circular flow of income. Now we'll be looking at the equilibrium and the disequilibrium situation in an economy using the circular flow of income. Now, earlier we had been talking about the injections and the leakages, right? Now we'll look at how an equilibrium or disequilibrium situation can occur, right? So now, if an equilibrium has to exist in an economy, the level of injections must equal the level of leakages, right? This means if you want income levels to be unchanged, right? And we are talking about, again, the two sector model, remember, which in which there was no participation of the economy in international trade, right? And if you want income levels to be unchanged, the injections must equal the leakages. That means that whatever additions were made to the circular flow of income, they must equal the withdrawals from the circular flow of income. Now, what would happen if the injections are equal to the leakages? So, for instance, if we say the savings are equal to the investment, right? Now, what were savings? Savings were withdrawals, right? And investment was an injection, right? So, notice this Y is the equilibrium situation, right? So, in a two sector model, this is an equilibrium situation where the injections are equal to the leakages. What's an injection in this situation? Investment. And what's a leakage? Saving. So the point where the injections are equal to the leakages or the withdrawals are equal to the injections, that's the equilibrium situation. So the horizontal axis is showing the GDP, the output level, or the level of incomes, and the vertical axis is displaying the savings and investment, right? Now, what would happen if injections are greater than leakages? That means if more money is added to the circular flow of income, right? There are more additions. What would happen? There would be extra spending, right? So incomes would increase, right? But then what if it was an entirely opposite scenario? What if leakages were more than injections? That means there would be more spending leaving the circular flow of income. And then what should happen to the level of income? Should they rise or fall? If there are more leakages, exactly, the level of income should fall. So, how would we graphically represent situations where there are changes in the level of injections and leakages? So, let's say if there was an increase in the level of investment, investment is what? An injection. So, it should cause the income level and the output level to rise, right? That's exactly what has happened. Now, notice initial equilibrium was at Y, where the level of investment was equal to savings. When the level of investment rose, the output level rose from Y to Y1, right? As a result, there was also an increase, right, in the equilibrium position. Get it? But if there would have been an increase in savings, what would then have happened? Then we would have made our curve a movement towards the left. Then this would have been situation S1, and it would have led to a fall in the level of output. Why? Because then less would have been used to produce goods and services, right? Because you are drawing money out from the circular flow of income. Get it? All right. Now let's look at the situation in a four sector economy. Now notice the graph is the same, but there are additions to it. Initially, we were only talking about, let's say, savings and investment. Now, since it's a four sector economy and we are talking about exports and we are talking about imports and we've included the government as well. So this means we are going to be adding G, which is government, X, which is exports, T over here represents taxes, and M over here represents imports. So the green line is representing the withdrawals, and the blue line is representing all the injections, right? Now notice this is the equilibrium situation in a four sector economy where the injections are equal to the withdrawals, right? Now, again, in this scenario also, we can bring a twist by bringing in changes in either the injections or in the withdrawals. So you can do that for your practice. For instance, if I say there was an increase in imports, so if there was an increase in imports, what would happen? The curve should shift inwards, right? There would be a withdrawal from the circular flow of income, right? Because we represented it as what? As a withdrawal, as a leakage. So now this would be the equilibrium situation. Initially, Y was the equilibrium point. Now, since there is a rise in the level of imports from M to M1, this increase in imports. So now the equilibrium point is going to be shifting from Y to Y1. What if there was an increase in exports? Then you would have drawn the curve like that. Just like we had drawn in this two sector model, talking about an increase in investment. And then the output level would have risen. This would then have been the level of output if there was an increase in exports. Why? Because that's an injection, right? An injection causes GDP to increase. Now, the question which arises is to what extent would this keep on happening? So, you see, an injection will cause GDP to increase. This would continue until the leakages also increase to equal the increased total injection. So, this continue until it balances it off. So, how can you relate the injections and the leakages? You see, if there is an increase in investment, what happens? How can you relate the two? If the firms invest in businesses, they expand their production activities, what happens? It causes an increase in incomes. What happens to this increase in income? This increase in income then enables people to save more, right? So then this is what? This is a withdrawal, this is a leakage. So it caused an increase in income, right? Investment was what? An injection, which led to an increase in a withdrawal, a leakage as well, right? So these savings can then increase investments, and then further you can use these savings to increase investments again. So people would be saving it and maybe they would invest it again, right? Or let's take another scenario. If government increases its spending, right? So what would happen? It would be increasing incomes of people. And when people would be earning more, the government would be generating more tax revenue, both by way of direct and indirect sources of tax. Let's take a third scenario. If the level of exports increase, what happens? Domestic firms would be earning more. There would be an increase in the level of income, right? So higher levels of income would what? Would enable people to spend. So people would be spending not only on the locally manufactured goods and services, rather they would also increase their spending on imports. So again, what happened? Increase in exports was an injection that led to a rise in income, which further led to an increase in withdrawals or leakages. So this is the relation between leakages and injections. I hope you understood. this topic of ours, which was topic 4 of your AS level, the introduction to the circular flow of income. Let me know in the comments if you have any further suggestions. Stay tuned, subscribe. I'll be back with more such informative tutorials for you. Happy learning.